like to thank everybody for joining us today. My name is John Pingle. I'm a professor and director of corporate relations within the Sales Excellence Institute. This webinar is one of many that SEI is hosting this summer, and mainly it's just in an effort to engage our students, our alumni, our partners, and the general business community. And our hope is to provide an environment where we can have deep discussion on different aspects and changes within the sales world related to COVID. Today, we're going to be specifically talking about COVID-19's impact in financial services, specifically related to financial services. And I am thankful that we have three PES and Sales Excellence Institute partners that have joined us today to have a discussion. So first, I'd like to thank TDECU and Josh Bryan, State Farm, Daniel Barbarino, and Fidelity, one of our very own alumni, Justin Bremmer, for joining us today. The ground rules are pretty simple. This is going to be a 1 hour long webinar with these three guests discussing the impact of COVID. And we're going to try and leave about 15 minutes at the end for some Q&A discussion for everybody that has joined us on the webinar. I'd like to ask again, please mute your microphones. Feel free to turn your videos off if you'd like. For the next at least 45 minutes, it'll be mainly a discussion between me, Justin, Daniel, and Josh. If you would like to ask a question in the middle of this conversation, or you would like to wait till the end, I want you to use the chat feature through Zoom. Okay, so let's keep the microphones off for the duration of this conversation, and I will moderate and introduce any questions that you guys have as we go forward. So thank you all for joining us. I want to start with just a basic introduction from our guests. So if you guys can, just tell us a little bit about, tell us what company you're with, tell us your job function, and then just tell us a little bit about your company in its response to COVID-19. And we'll just kind of go around the table real quick. So Josh, why don't you start us off, buddy?
Perfect. Thanks, John, for having me, man. I appreciate it. Josh Bryan, I'm the VP of Strategic Partnerships at TDECU. So within my role, I oversee business development, community relations, and government relations for the organization. So TDECU is obviously a credit union in Houston area. So we're Houston area's largest. We're about $4 billion in assets, which should pass that this month. But basically, we're a full-service financial institution. We've been a partner with U of H for roughly about 6 years. As you can see behind me, TDECU Stadium is the football stadium, so we like to represent that well. But we've been working with PES for the past several years. Been a great partner. Been really impressed with the students that John and team puts out. But really, just really trying to be great partners to the students, faculty, alumni, and students, obviously, and really just kind of help them on their financial journey. But just really appreciate the opportunity to be here, John, and work with you guys on this.
Thanks, Josh. Daniel?
Yeah, sure. Thanks for having us today. Really appreciate it. This is a great opportunity for me to learn from some wonderful minds in the financial services industry as well. My name is Daniel Barbarino. I am a territory sales leader with State Farm, and my main priority is the growth of State Farm, the profit of State Farm, and the recruiting of new agents to State Farm in my area. Currently, I oversee 46 offices, and I am a partner with them to grow their business, and that's what we do. We have been a partner with PES for a while, and we've had some great success finding some very good talent, very impressed with the talent there. And we just appreciate the opportunity to be able to interact with students.
And Daniel, you're also an adjunct professor for us. You help teach the Selling Financial Services class, correct?
That's right. Keeps me young.
I can tell. Well, thanks, Daniel. Justin, go ahead.
Yeah, thanks, Sean. So Justin Bremmer, I'm a regional planning consultant for Fidelity Investments. And so my role here at Fidelity is to train, coach, and develop our advisors to help do what they do every single day, which is meet with our over 32 million clients at Fidelity and help them build long-term sustainable financial plans. And, you know, the program here holds a special place in my heart. As John mentioned, I was a student and a former program manager at the university, and it meant a lot to me, and happy that, you know, it took me a little while, but, you know, we're in our second year of partnership with the program. Got some fantastic associates that have joined our team, some really great interns that we've got right now. And, you know, just really happy to be a part of this today.
Well, thank all three of you. You guys are great guys to spend time with, but your engagement and investment in the students and what we do at the Institute is huge. Let's just go around the table really quick. Give me a quick snapshot. What is in the area of your business that you are responsible for? Just give me a quick snapshot, a state of the, how's COVID impacted your business? Josh, go ahead.
Yeah, I'll say, you know, for my group, you know, COVID has taken a pretty big impact. You know, we're usually in the field, business development, community relations, being able to make an impact in the community. It's taken a hit. You know, my team's, you know, used to being out in the field most of the day, you know, going networking, you know, building the ROI or COI and things like that. So being able to engage has been difficult. You know, we try to do that as much through Zooms or WebEx as possible, but it's been challenging. You know, also through the community relations side, being able to provide volunteer opportunities for employees and kind of make that social impact has been pretty difficult as well. You know, we've stepped up and we've done a lot of things around food banks and try to provide meals for some of the communities that we work in. But, you know, our employees really love the volunteer aspect. So we've had a hard time, you know, aligning those. But, you know, we've really tried to engage with as many, you know, virtual networking opportunities that we can, and really just try to continue to, you know, build the COI and be able to go out there and still build our network. And grow the business. But there have been challenges, but I feel like we've done a good job adapting, and we're moving forward for sure.
That's great, Josh. Daniel?
Yeah, so it's I think you're going to hear some phrases over and over again from us three being in this industry. It's been a difficult journey. The first month, well, I'll say the first 3 days in which we decided to shut down State Farm, we mobilized about 43,000 people in 2 days. And that's very difficult as you shut down 4 hubs, which house, you know, 10 to 15,000 employees each. And that has its direct impacts on the agents too, because the agents are in the field and dependent upon those employees for underwriting, claims, a lot of different aspects of insurance. So it was choppy at first, to say the least, but I think we hit our stride towards the end of March, going into April, and results-wise, we've done quite well. We've actually grown PIF in policies in force. I'll try to get out of the insurance jargon here. We've grown policies in force, you know, through April, May, and June. Obviously, July is looking pretty good. But, you know, we had a lot of things to work through. Our agents had to work through us not making customers pay their bills for 3 months. So we gave them a basically free insurance for 3 months if they were impacted in a negative way by COVID, and then their financial situation changed. So along with that, we've also, as Josh was saying, we've tried to be as influential as we can in the community. We've given right at $10 million just directly to agents to invest within the community. That's not including what we've done in the community. We've given right at $2 billion with the B, $2 billion back to communities throughout this thing. So our total investment with the forgiveness of payments and what we've done there as far as dividends is concerned, our total investment so far has been close to $6 billion during this 4-month stretch. So it's been impactful. I've seen a lot of communities be very grateful for what they're doing. We tend to partner with a lot of police departments, fire stations, obviously with Houston Food Bank. Harris County Hospital Systems has been one that we've done a lot of work with. So it's been interesting, to say the least. It's been interesting for me because I am a field employee. I live in my car, and my car is my office, and I've put approximately 500 miles on my car in the last 3 months. So it's crazy. It's interesting, but it's also showing, I think it's showing this industry there is a different way to do business. And it's a way that we can be successful, all of us together. But it does not take the place of what we like, and that's that face-to-face interaction, that relationship, the handshake, the pat on the back. So that's something that I'm looking forward to getting back to for sure.
Thanks, Dan. Justin, what about you? Give us a quick snapshot of what's happening at Fidelity and what's happening specifically in your role.
Yeah, so very similar in that, we have over 190 investor centers across the country that clients walk into every single day and under normal circumstances to meet with their advisor. And so with the flip of a switch, not being able to do that, it does create challenges. It's having to learn new muscles and new skills of how do we still support these clients in the way that they need to be and deserve to be supported, and how do we continue to deliver that customer experience that we're focused on. And we've had to pivot and manage along the way, right? We still have our investor centers open. We've got shifts of teams that go in, and it's kind of quarantined off where clients can come in and there's a video Zoom screen that's up all day so they can talk to someone that's there in the branch without interacting. They've got a drop box if they need, because the reality is some things still need to be done by paper, and sometimes there's questions that come up, and so we want to make sure that we're there to support them. Very similar to Daniel, we've got 42,000 employees that we were able to transition 98% to virtual in a 48-hour window as well. And thankfully Fidelity had the foresight to buy up work from home kits, and we warehoused them, and they created a website where all of our employees went in, put your address, and you received a package with a monitor, a keyboard, a docking station, kind of all the basics you need to be able to function and set up from your home and be able to still be there for our clients, which that was critical, because there's just a lot of systems in our industry that, customer privacy and safety is a priority always. And so, you can't be, you gotta make sure things are buttoned up and in a good spot.
Oh, that's great. Josh, I want to go back to you just to see if you can share some of the ways that TDECU adapted, because I think what's really interesting is all three of your organizations rely so heavily on the face-to-face engagement and also building relationships in that way, whether that's through community involvement or just face-to-face with your customers. And so Daniel and Justin talked about mobilizing the force, getting them into their homes, but then also starting to find ways to adapt back into how do we engage appropriately face-to-face without endangering the customer or even our employees. So Josh, quickly touch on some of the things that TDECU did when it came to your branches and your employees.
Yeah, so we ended up mobilizing about 82% of our company in about 14 days. So it took a little bit more time on our side with our call center and mobilizing them to home. But we've still got about that percentage working from home. Our branches have remained open throughout this process. So they're still servicing members through the drive-through by appointment only as well. But really, what we've tried to do is really take advantage of digital capabilities as well, like the other guys mentioned. And, being able to make appointments through, via our webpage, come in, interact with our staff at the branches, but just kind of meeting our members where they are, whatever way they want to interact, we've really taken advantage of that and really try to meet them at that point. Digital services is our main focus right now. There was an article that came out through a publication recently, and we were ranked number 2 in the country for credit unions with over 24 digital offerings. So really being able to try to, let our members through our app and through our digital capabilities be able to do everything that they would face-to-face, and really trying to help our employees build relationships through these digital channels that you just can't get through, as Daniel said, a handshake or a pat on the back like we're used to doing. We're traditionally a face-to-face channel, but we're really trying to adapt and compete in the digital space.
It's really interesting. I want to try and break off. I want to kind of take a step back into how your organizations are engaging the sales force first and how we're equipping them. But I think there's the secondary piece that I want to jump into is how we're engaging our customers, because all three of you said some really interesting things that I want to touch on. So let's go back and focus in on the employees. When it comes to, like Daniel, for yourself, you have 40 some odd agents that you're responsible for, and they all have employees. So maybe, what did that look like at the start of COVID, and what's that turning into as far as you engaging the people that you're responsible for? Whether that's them at home, you doing Zoom meetings, or you meeting face to face. Give us a quick snapshot of what that's looked like for you.
Yeah, sure. So, we've got a little over 19,400 offices in the U.S., and each one of those agents is an independent contractor, and so they employ roughly 120,000 folks. Each, some employ 20, some employ 2. But them being independent contractors, we left the decision up to them as to what they wanted to do when it comes to shutting down your office, how you want to handle your employees, how you want to handle customers. So we just left that up to them, since they are independent contractors. Now, my group, I've got about 15 offices that completely shut down at first, right? They mobilized their entire team to work from home. The agent was working from home, and the 33 offices stayed open, just no customers coming in, kind of like what Justin was saying. And then those have morphed into appointment by appointment only. If the customer does want to come in, if they need to make a payment, they have one spot where they can drop off the payment inside the office if they're not set up on any kind of digital thing. So that's kind of our sales force. That's how that has worked. I would tell you that in Texas, the majority of agents' offices have stayed open somewhat. They've probably locked their doors and not letting people in, but that just makes it easier for them to deal with their employees if someone's exposed or whatnot. I've had offices have to shut down and clean for 7 days, and then they come back and reopen again. I think everyone now at this point has been around someone that has been exposed. So there's just a matter of time as we work through this. So my engagement to them personally, to my 40 some odd offices, has been a little bit of a mixed bag, because I have to follow State Farm protocol since I am a State Farm employee. However, I am not an in-office State Farm employee.
Right.
So the protocol that we followed has changed as well. It changed last Tuesday to where I'll take you back. In March, we were as needed, right? You could still go see someone. You just had to be careful, use your best judgment type thing. I believe we had some issues in other parts of the country with that. So that changed to a stay-at-home order pretty much. So for about a month and a half, we were, I was at home, and then now it is back to certain scenarios is to where I can go out into the field. So I've made a couple trips out in the field last week, and then I've got one scheduled for tomorrow. But the agent has to agree with me coming to their office. So that engagement during that month and a half was interesting, because I've never been a very big virtual meter, and I had to get pretty good at keeping I would call it what y'all call in the spin as creating rapport. I like to talk. So when I go into an agent's office, we might talk about duck hunting for 30 minutes, and then we'll talk about business. Well, you can't do that really in a Zoom or Skype setting. So I found out for myself that I can get needed business done what usually took me an hour to an hour and a half and 25 minutes of driving. I'm good in 20-25 minutes. We can get to the point. We can get some action plans established and then have a follow-up call. So I kind of beat myself up that first month of stay at home. I had 72 virtual appointments, and I was just running through them like crazy. And it made me pretty tired, but it ended up increasing our production and our profit and where our numbers are. So that's how I have dealt with this from a sales standpoint, is just getting in front of them as much as I can. Yeah. And then obviously you figure out, well, hey, Daniel, as a manager, that's way too much, bro. So you scale back a little bit and try to find a happy medium there, so that you can still motivate and still get the necessary information out, but also be respectful of time and trying to get everybody on a call in a certain period.
Daniel, how much of your time, and maybe it's shifted and maybe it hasn't, but now that each individual agent is having to make adapt as they deem necessary because they are independent agents, how much of your time is spent helping that agent strategize how to engage their employees and empower their employees in person or work from home versus strategizing about how to grow the business and how to attack new customers and grow your share of each customer? Has that shifted at all where you're spending so much time just helping them organize their sales effort versus engaging customers?
So at first there were many conversations and many questions about what to do and how to do it, and I could offer suggestions, but I can't tell them what to do.
Right.
So that kind of depended upon them on what they wanted to do, and the majority of mine stayed open and they stayed engaged with their team coming into the office. When I think almost every office is probably shut down at some point. We were considered, as all financial services was considered, essential business. So we were able to legally come into the office, but I believe all offices have shut down at some point. And that has really emphasized, we have, we use Salesforce as well. We call it ECRM, Enterprise Customer Relationship Manager. And I can tell you that the acumen of my agencies has increased dramatically using basically that for coaching and tracking and monitoring. So we're able to tell, most people on this call know this, but you're able to tell how many outbound calls you're making, talk time, and so your goals. What we ended up spending a lot of time doing was resetting the goals, and the goals for outbound talk time and the goals for calls actually increased since you had people at home and in a virtual mode, because they're not taking so many inbound calls. Talk time actually has gone up about 38% because people are answering their phone. And, I'm horrible at it. If I see a number that I don't recognize, I never answer it, but I don't know what it was during this period. I would answer every phone call. It was nuts. Like you're just jonesing to talk to someone. So we've noticed that the talk time has gone up 38%. And so we've been able to have better conversations and just want to take care of, first of all, their money and saving money, making sure they're getting the discounts necessary and what they need. But also, I believe that, our consumer base wanted to really have thoughtful and deep conversations with folks. I know that, Justin has had a lot of success in their industry, and Josh as well in the mortgage industry has blown up. So I feel like clients, they're wanting to talk to someone more. They're taking more ownership in their financial futures. And that has been a huge, huge benefit for our industry.
Justin, how like you said earlier, you've got these Zoom meetings or the Zoom up when somebody walks into a branch. What are some of the ways that you're coaching and the organization is coaching salespeople in how to engage customers through technology or on the phone, some of these other ways to engage? What does that look like?
Yeah, definitely a lot of Zoom, right? Just like all of us, I think. We had the technology ahead of time before all of this started. We probably weren't near as good at utilizing it as we could have been. And, so there was a pretty steep learning curve getting there started. But, one of the things that really from the top down, Fidelity's really been trying to stress with our people is this is not working from home, right? We're all at home working during a crisis, and those are two very different things. A lot of people are teaching their kids, you're dealing with, hopefully nobody's sick, but there's a whole component of real life going on, and we're all trying to do our best. And secondly, like just alone under normal circumstances, the financial services sector is a very emotional space, right? I tell people all the time, we're about 70% of the time we're counselors or psychiatrists for our clients, right? And the financial aspect is a smaller portion. And this has just heightened that. And, you've got to be careful to protect yourself first so that you can be there for clients. Someone, I don't know where the statistic came from, but they shared it on our meeting recently of, Zoom statistics show Zoom can make you 50% more productive or 35% more productive, but you burn out 50% faster. Just kind of sitting alone in front of a computer and a screen all day. And there's a reality to that. And so we try to be very thoughtful of, look, if we're not sharing the screen or going through something that we need to see, like, I encourage my folks to step outside, take a walk, let's talk on the phone, let's catch up, let's do something different than kind of sitting and being idle. Because to Daniel's point, efficiency has gone way up, right? When clients don't have to take a half day off and drive to the office to meet with you, right? You get what would have been an hour to an hour and a half appointment done in 35, 45 minutes. And there's not this feeling of, I need to ask more questions or stay longer because I took off work and I drove here. And, we went from averaging, our average advisor was around 15 appointments a week. They're running 18 and a half to 19 right now across the country. And that's just, you can get more done in less time. But if you're doing that same thing all day long, nonstop, you're going to burn out quick. And so you've got to make sure you're careful of that.
That's great. Josh, we talk about burnout and also trying to make this as productive as an opportunity for our employees, but also a safe opportunity for our employees. What's TDECU doing to help employees balance work in the remote learning for the children? We got the new school year coming up. How is TDECU protecting the employees and keeping them safe, but also encouraged and motivated moving forward with all these things coming up?
Yeah, something Steph, our CEO, said very early on is we're going to protect our employees, our members, and our future, and in that order. So, we've really taken a real stance at protecting our employees. So, we've had roughly about 82% of our employees at home since this whole thing started, as I mentioned earlier. But it's really about, we're not releasing into phase 2 to get those back office employees back until we really feel safe and feel good about where this COVID, crisis is. And I think with where Houston is today, it's not in a great place. So, we're being very conservative with that. Also, obviously everything within the branches as far as, providing hand sanitizer, face shields, things like that, just keeping them safe on that side of it. But, really trying to keep them engaged, and driving that engagement from a manager perspective. And, a lot of things we're doing is just constant communication. We huddle daily with our teams. We do one-on-ones weekly just to check on them. A lot of them are just more well-being visits as well. Maybe it's not on the business today. It's just more checking in on our employees to see how they're doing. Because mental health is a huge thing right now. It's I have 2 small kids at home and my wife's a teacher. So there's a lot of anxiety right now about school starting up, depending on which school district you live in. But it's a major focus of our executive leadership team. And, I'm just proud to work for a company that has taken care of its employees throughout this. But, we really keeping our employees engaged. We've done several things too. We've done like morale parades. So for some of the executive leaders, we've gone to some of our branches and done like parades for them. Just, it's small things, but it just really try to let them know how much we appreciate them, because, I know as Daniel, I think said earlier, a lot of our employees are essential workers and they've been back every day. So, we want to show our love to them. And we also launched our Gallup employee engagement survey last week. So it'll be really exciting to see, how our employees are feeling and, kind of get some of those results back to kind of get a test, see how they're doing.
Daniel, you and Josh specifically both mentioned about giving back to the community and also empowering your employees to go do that, to find time to still be a part of the community in some way, shape, or form. I'm sure that helps. What are some of the best practices you've seen within some of your agents in what they're doing to help keep that employee engaged, to make sure that that customer experience is where it needs to be, but again, also that employee can take care of what's happening at home with kids at school, kids home for the summer. Everybody's got a kid that runs in and out of an office through a Zoom meeting. What are some of the best practices you've seen from some of your specific agents?
I've seen a lot of the guys and gals that are agents. They are having varied work hours now. I mean, used to 9 to 5:30, 9:30 to 6 would be normal hours, but now I'm seeing many more just making sure the phones are covered time, plus giving some extra time off. I've got one office that has basically given every Friday afternoon off during this whole ordeal, and that you talk about increasing employee morale. I mean, you give time back to spend with family. That's been fantastic. Another office has done a thing where they've given the employees the opportunity to give back to their charity of choice or their choice of whatever community thing that they would like to help. So I know, in Pasadena there's a place called Sarah's House. It's for battered women and abused women, and they've partnered with them, and we've given them all kinds of items, clothing, food. But I think that builds ownership within that employee group. You giving them the opportunity to choose where you're going to donate time and money, and it seems to have worked out. But like everyone else on the call, like Josh and Justin, we still work in a standard business hours environment. So you have to have coverage, but I think relaxing the hours and the time spent sitting basically at a kitchen table in front of your computer, that's helped out tremendously.
Yeah, that's great. I agree. A lot of flexibility needed, right, as everybody's adapting. Let's shift over to how we're engaging our customers. I just in my own individual conversations with y'all, or with each of you, there's been some wins for your organization during this stressful time. I read an article the other day where it talked about, and I think it's pretty obvious for everybody here, household income savings are down across the board. The income's growing weaker each week. Spending has decreased across all categories, with the exception of grocery, household essentials, and online entertainment. Job security is a major concern. And, there's a lot of people that are worrying about what is the next week, what is the next month, 6 months, and a year look like. But you guys, your individual organizations have found ways to serve the community in a way that benefits them and benefits your organization. So I want to spend, this conversation is speeding through us. We don't have much time left, but I want to spend some time just talking about how you're engaging your customers. So Justin, let's start with you. What are some of the major changes you've seen, positive and negative, when it comes to engaging your customers in prospects?
Yeah, I mean, the important thing for us, and I think it relates to all of our spaces within this financial services industry, we get to play a role in our clients' lives during some sort of big and pivotal emotional moment, right? Some are good, right? A new baby, a retirement, it could be a loss of a job or something, not so positive going on now. And first and foremost, you just want to be present and be available, right? And so, being able to pivot quickly so that clients can schedule appointments online, meet with our advisors virtually via Zoom. We've got screen sharing technology so that they can, go to fidelity.com and share their screen with us, and vice versa, to be able to walk through the conversation. But I think all of us in this room, we're all salespeople, and so that face-to-face interaction and connection, we thrive off of that. And so it definitely feels a little bit like having one arm tied behind your back to not be able to sit across the table, sit next to your client, and have that same conversation. And so a lot of the coaching and work that I've been doing with my advisors is, look, the reality is it's a little bit different, right? When you don't have that emotional in-person kind of feedback to go off of, you've got to be really intentional about how you say what you say and when you say it, and the visuals that you're showing your client, right? Like, we've all been in Zoom meetings where it's super easy to get distracted and check out. And that's not different for our clients. And so how do we keep them engaged in the conversation so that we're not leaving them behind, and we're making sure that they're on the same page? But I think the biggest thing, right, I mean, on top of all of the real life issues and emotional components we've talked about, is like, there's been financial turmoil too. There's been a lot of ups and downs and things going on. And so our most important thing is to be present, show up, have an opinion, and help them make decisions.
Justin, has there been a shift in how you communicate and engage the customers where the salesperson is seeing a bigger increase with existing customers via just email, or prospects is, through some LinkedIn? Or are you seeing the way you communicate, the channels in which you communicate, have they changed dramatically with existing customers and prospects?
Yeah, the best way to describe it would be if we had a list of kind of technology things that we would like to have over the next 5 years, we got a lot of those in about a month and a half span, right? So, a texting platform, right? And in our industry, it's, everything is record kept. And so you can't just text the client. And so, we've launched a texting platform that, allows the advisors to use their own device, but also, they're not going to get a text message at 9 p.m. It's got, automatic reply form outside of business hours. And, we all, like Daniel said earlier, I don't answer calls that I don't recognize, but, we're more open to being marketed to in a text message these days, and more willing to respond than we are via email or voicemail. So that's been a big win and change from a technology standpoint. And then to some of the other points that have been made, we're just finding that a lot of things we would have said we wouldn't be able to do very well, you actually are, right? I mean, there's a significant component of my job that I would have told you, not being in the branch with my advisors and being able to pop in and talk to them, I'd say it'd be difficult, but everyone was so, just thriving for wishing to talk to someone, that every time I set up a one-on-one coaching time, everyone's like, yep, I'm there, right? And so people were it was actually easier to get on people's calendar virtually than it was in person, which really surprised me.
Daniel, I want to go back to you. What do you think that looks like? Kind of the same question for the State Farm agent. How is the communication to current customers and prospects, how has it changed in this environment?
Yeah, so I think when it comes to prospecting, I'll tackle that one first. When it comes to prospecting, I don't know that has changed a ton. I think that there's been more of an emphasis from each individual agent on the actual process to go through to prospect. So you're able to track how many times you call a certain prospect, and it just seems like it's a lot easier. We had like Justin said, we had the same technology in last year, all of last year, as we do now. But now people are like, okay, let's look at that. Let's look at that Salesforce dashboard and see where we're at. So I think that the prospecting hasn't changed, like in the way that we acquire prospects, but I do think that the tracking of each individual sales team has changed dramatically. And it's made them more successful and shown salespeople how they can be more successful, because now everything is data driven. I mean, we can't necessarily listen to the conversation they're having, but I can tell you that an office that makes 1,600 outbound calls a week is going to write more new business than an office that makes 800. I know that's very simple and elementary, but you're able to show that to an individual team member on their individual basis. As far as our in-book customers, we've got a few of those. In my area, we insure right at 100,000 cars, and the communication has been, it ramped up in my opinion, and not necessarily from the agent perspective, but from the consumer perspective. Like I said earlier, making sure that they're getting the discounts that they deserve, because I feel like people are watching their wallets more than ever. I don't think there's less disposable income out there. I just think that the way it's being spent is quite different. I've got a friend that's in RV sales in West Texas, and he's had the 3 best months he's ever had, as a general manager of a pretty decent sized RV dealership. So people are spending differently, people are spending time differently, but our in-book customers, we've just been, I've seen more of a flood of incoming calls rather than the outgoing calls to them. So it's helped us, in our business. Pivoting is essential. So our in-book sales have actually increased because of the willingness for those folks to talk to us and to listen to options that we might have on their insurance needs.
Interesting. Josh, let's go to you then. We've had conversations about TDECU, specifically the mortgage side of TDECU, interest rates are extremely low right now, and and so a lot of people are out shopping, whether that's for an existing mortgage or they're looking to move homes. Um, what has the experience been for the sales organization over, let's just say something like mortgages, where you have this inflow of people that are looking for advice and to assess the situation? How are you guys managing that?
Yeah, to be in the mortgage business right now is a great time. I think any mortgage loan officer, anybody in the mortgage industry will agree with that. We had to move about 30 people from our branches over to our mortgage group within about a week or two, just to support the inflow of refinances. And purchases have still remained, but we've just really had to shift some employees around just to handle the influx of requests. And as Daniel kind of alluded to, our auto and our RV and kind of the toy purchasing and car purchasing has still remained. We've had record months last month, and our pipeline is still really full on both of those lines of products. But we've been extremely lucky and blessed that members have kind of called on us when they needed us. But we have shifted a lot of models from those branches who have supported face-to-face, doing a lot more outbound calling, standing up an outbound calling team, utilizing the data that we have internally, prospects or members who fall out of the pipeline anywhere in the digital process, reaching out to them, helping them, close that loop and help them take advantage of these products. But, the rate environment has been huge for us, but, we've tried to craft some products also that, people need at this time, like low unsecured loans as well, just kind of help them in a pinch. But we've been extremely lucky, and, our business model hasn't changed a ton, but like I said earlier, the focus on digital is really where we're moving to, and really trying to refine those processes.
Hey, John, can I ask a question?
Please.
All right, Justin and Josh, we all have offices all over the city in different demographics and, socioeconomic areas. Have you guys noticed that there is maybe one area, I'm not going to ask you to name a specific area, but maybe a part of our, let's call it our metro area, that seems to be struggling with not having face-to-face convos rather than not? Like, I'll just tell you real quick, and I'll use specific areas. So generally use specific areas. So Southwest seems not to be struggling as much as Northeast. Are you all seeing that as well?
Yeah, I think it's been surprising, where clients will come into the branch where it's kind of quarantined off, or they'll just make the assumption that we're open and, open for business as normal, especially not only from an area, but from an age demographic. It's been surprising to me to see, the amount of people that are. And so I think it's beginning to increase a little bit of clients that are calling in and just really wanting an in-person normal interaction that they're used to. I'd say as a whole, they're mostly understanding, but we are starting to see some of that as well.
Yeah, Daniel, for us, we have some legacy markets like our Lake Jackson, like where we were started, and some of our older markets where it is a more aging community. Those areas really still do want that face-to-face interaction, and they're more opposed to the digital offerings, especially when it comes to money, whether it's meeting with a wealth associate or an insurance agent or getting a mortgage. They still want that face-to-face interaction. So that's kind of where we're seeing it more so.
That's exactly what I was thinking about with you, Josh, is that legacy area down there south. So because I'm seeing that too.
How are you guys? I mean, that's a lot to balance for all three groups, but you have this, you have your existing customer base that you said is coming to you right now because they need to assess their relationship with you and the products they have. So that's nice because they're already coming back to you to analyze that. Then you have prospects, like in Josh's situation, everybody's out looking for a new mortgage or better rate. So you've got a flood of potential new customers there. Is there anything that you're doing unique, or that the agents are doing, or your advisors are doing, to continue to go out and prospect? Because you're right, you do have people that the only way to prospect is face to face, and then another way that Josh said they're prospecting is they're just going digital and probably increasing their advertising spend on use us or analyze the situation via digital solution. So from a salesperson, giving them a strategy, and the tools necessary to go out and engage either face-to-face or online. Is there anything unique that you guys have learned or some kind of best practice on how we've pivoted here?
Yeah, I'll say on our side, we did a lot of PPP loans throughout this process as well. And so, we really had an opportunity to call on some of those businesses that we were able to engage with and kind of deepen that relationship. So that's something our sales teams have been focusing on as new clients or new members come into our organization, is really focusing on the relationship deepening, finding new opportunities to engage with them and kind of introduce them to new services besides just having that one product. I think Daniel spoke to that a little bit earlier, but while we've got a captive audience and they know who we are, it just gives us a great opportunity to deepen.
Yeah, and I think it sounds a little bit probably ridiculous, but I think all of us have kind of a digital presence. There's all a focus on marketing that way in this new environment. But for us, it's kind of blowing the dust off of that word of mouth referral and the importance that it plays in this role. A lot of people are in similar situations, whether it's through their employer and changes going on. We're talking more to each other about things that are going on during this time and how it's impacting us. And so I think, making sure that, you're setting yourself up to win that word of mouth business and be, a resource for your client. It's not innovative or new. It's something that we've all done for a long time, but, kind of had a renewed focus on that for us.
Daniel, anything there?
Yeah, our individual agents, I've seen an increase in their personal spend on SEO, and that I can't really track that, if that generates X amount, but I've noticed that they've increased that spend. I can track how many leads that they are purchasing, and that has gone up tremendously. Not just year over year, but like from February to April, it's almost doubled in my area as far as purchasing leads.
Is it, and feel free to just keep your mic on mute if it's not an appropriate question, but are there products that people are coming to you now where it was an add-on in the past, where people are coming saying, I need to know about A, B, and C? Is there something new that it was something, third, fourth down the line, and now people are really coming to you, like they're coming to Josh and TDECU for mortgages? Is there anything specific that a new product that just kind of jumped out now that people are at home and assessing their finances?
Are you talking to me?
Just you, Justin.
Oh, man. Without getting like super duper specific, because we can't get that way.
Right.
But I would tell you that there's probably, I've seen more concern just with general customer basically wanting to know about their life insurance coverages. And, they're bringing their policies from work, which, most people have life insurance through work. They're bringing them to us and having, quote unquote, an expert look at it to make sure that they're covered if they were to contract some sort of a virus. Also, the other piece, which is it's industry wide, is business owners insurance. And whether or not a virus, a pandemic is covered, if you can cover kind of loss of income due to business through a business owner's policy. And I'm not going to get into the details of whether it's covered or whether it's not. Each claim is handled on its own merit, but those have been some of the increasingly more prevalent conversations in our offices today.
That's interesting.
Yeah, for us, it's just really just been the combination of we're all at home and we're all either more available or have more time, and the market's been volatile, right? I mean, when things are going on, clients are going to want to review and reassess their overall plan more frequently, right? And maybe clients who in the past said, you know what, I feel comfortable, I don't need to look at it, right? I might in this environment feel more of a need to say, you know what, let's sit down and talk and review and make sure that, overall I'm in the best possible position for myself and my own situation. And so that's what we've seen an increase in, not really any particular solution, but more in just a desire to answer that hey, am I in the best place?
Interesting. Josh, we have a question specific to you. Are there any changes happening in community development banking right now, such as access to project capital or changing the screening process for partnerships?
You know, I would hate to, and I know he's on the phone actually. He may be able to answer it a little bit better, but Todd Lucas is our VP of business lending. He may be able to answer that question a bit better than I could. But, you know, business lending, our business lending group, as I said, it has done quite a bit during this time as well, and been able to, you know, they do a lot of construction lending, and I don't know if the question's more around like kind of like community reinvestment or more development or.
I read it as it was written. It just says, are there any changes happening in community development banking right now?
Yeah, if we can circle back to that, I'll chat with Caitlin privately real quick, and then maybe we can circle back to that.
You know, because we're getting short on time, I want to talk about the impact all of this is going to have on your sales force over the next 6 months, a year, 5 years. What are some of the things where it's impacted, where we could potentially, it could have impacted negatively? And what are some of the positives that this experience as a salesperson has positively impacted that person? So just thinking about like the next 6 months, year, 5 years from now, what do you think some of your opinions on the negative and positive impacts of what we've gone through as it relates to the sales force? Daniel, let's start with you, and then we'll work backwards.
Yeah, I'm just going to answer that in a general sense for all sales folks. You know, as a manager, you know, a sales manager, quote unquote, I see people that run sales teams being able to generate the activity they need without the capital expenditure on workforce. So you can, I think we're seeing that now. We can generate, you know, the production, the new production, and also taking care of current clients with less people. I mean, if you get the right ones in place, then you're able to generate what you need. So I consider that it's a positive and a negative, right? I mean, your ROI goes up, but also the negative is there's less spots for people to come in and cut their teeth in a new role. So that's kind of my take on it.
Yeah. Justin?
Yeah, I think from a positive standpoint, we're all learning to do things in new, different, and a lot of times more efficient ways. And I think there's a lot of value, both professionally and personally, that can be added to salespeople in the future. Of, you know, personally, I'm in the car 3 hours a day there and back to the office, and like Daniel said, it's only put a couple 100 miles on the truck over the last few months, and that's a huge change for me. There's a quality of life change that, you know, I can see remaining as part of how we do business on an ongoing basis. I think some of the challenges, it's a different environment, not only for salespeople, but for sales leaders, right? I mean, you have to assess your people differently. And, you know, it's a very easy environment to slip into a micromanager, ticks and Salesforce report type of leadership style that's dangerous. You know, on some level we need it, but on some level we got to make sure we maintain that human element and emotional component of connecting with our people on a personal level to help them. And so I think there'll be learning opportunities, not only for how we engage with customers, but how do we lead our people?
You know, it's interesting. I mean, we've all said it, you've all said it, you know, Zoom meetings has made us very efficient in how we engage our teams. But sometimes efficiency is not what you need to lead a team. And so whether that's, yeah, we got rid of the death by meeting aspect of being team leaders in a lot of ways, but the passing somebody through the hall or just by their desk for 30 seconds a day really matters. And I know in our organization, that's been a huge struggle, is that we're so siloed now. If we don't have a meeting at 9 a.m. on a Monday, then we're not talking. And so everyone is still performing and engaging in their own tasks and responsibilities. But a lot of just the, I don't know the right word to describe it, but the passerby relationship building amongst team members and people below you. I think that's been a huge change and a big reminder to me how important those things are. When you get back in the office, it's important to stop by and just ask them how they're doing, how you can help them in the moment versus these very rigid meetings that we've all put ourselves in. Josh, what do you think?
Yeah, I think it's, this process has really, I think it's made everybody sharpen their pencil a little bit on how they sell. It's been, you have to be a little bit more creative than standard practices. So I think, we're helping employees to build some of those skills and kind of giving them some tools that they haven't had in the past. So I see, there's a lot of positive that can come out of it. My thing to my team is just, we don't want to go back to how we've done things, that things are changing. And, I think for Daniel and Justin both, our business models are changing for good. That's for sure. We know that. So it's just, how do we continue to evolve and kind of meet our customers where they are and really service them the best way we can. But, it's been as my boss calls it, the Olympics of leadership. This has been challenging times. And if you can manage and lead through this, then, it's, we're all going to be better off for sure.
Yeah, if we can take 20% of some of the efficiencies we've learned by using technology, but then let somebody like Daniel go back to being out in the field, 60 hours a week, engaging and getting that one-on-one, that's a really good balance that we can hopefully take from this. Well, we've hit our 1 hour timeline here. So I want to be respectful of everyone's day. So we're going to end the webinar here. Is there any last words from Justin, Daniel, Josh? Okay. No last words expected. I appreciate your time. I can't stress enough how much I appreciate what you do for our students first as individuals that represent your organizations, but also what you do for the Institute. These kind of conversations, I have no doubt, are worthwhile work during this crazy time. So thank you for joining us, to the three of you. For the rest of you, thank you for joining us as well. If you didn't already know who the Sales Excellence Institute is, please feel free to visit us at bauer.uh.edu/SEI. And feel free to join us on July 27th. We have a Selling Virtually workshop. It's going to be at 11:30. You can register on our website. So on July 27th, we're going to have a workshop regarding how to sell virtually at 11:30 a.m. So thank you guys for joining us. That concludes the webinar. You guys go have a great day, and y'all be safe and love on your kids and your family, and be ready to go do something amazing. Thank you guys.
Thanks for having us, John.
Thanks, John.